So let's dive into UnitedHealth. Right now, the stock is trading around $360 a share, down more than 28% year to date, which might actually be a good sign considering it was down nearly 60% just a few months ago. Despite that steep drop earlier in the year, UnitedHealth has been on a strong rebound since August, climbing more than 50%. Now the big question is, does it still have room to run, or are we nearing the top under its current conditions? As a CPA, I'll walk through the numbers so you don't have to. Now, if you find this video helpful, don't forget to hit that like button and subscribe to the channel. And with that, let's jump right in. So to start, let's look at the broader healthcare sector, which has been lagging behind the S&P 500 so far this year. The S&P 500 has delivered an average return of about 14.18% year to date, while the healthcare sector has managed only around 5.22%. Now, up until September 30th, 2025, the sector was actually down about 0.5%, but since October, it's bounced back nearly 4%, compared to less than 0.5% growth in the broader market. This shift could mean a few things. Investors may be getting more cautious and rotating their portfolios into defensive sectors like healthcare, seeking stability amid uncertainty, or there's genuine profit growth and innovation happening leading to these higher returns. So let's jump back to UnitedHealth and see whether there's still room for the stock to rally ahead of its Q3 earnings report. Now, recently the company announced plans to scale back its Medicare Advantage offerings in 109 counties across the US for 2026. Now, this move is part of an effort to balance rising costs with growing reimbursement pressures in the insurance program. And during their Q2 earnings call, management highlighted that upcoming regulatory changes are expected to reduce payments the company receives for certain conditions, creating a potential $4 billion hit to insurance profits in 2026. So by cutting back on some of these plans, UnitedHealth is proactively managing that risk. And when you combine the strategic adjustment with the fact that the company reaffirmed its 2026 outlook just a few weeks ago, it suggests that UNH remains on solid footing. So at this point, I don't see any major headwinds that could significantly derail the stock's momentum. Now, based on current analyst price targets, UnitedHealth has an average target price of about $360.20 per share, so roughly a 6% upside from where it's trading right now. Now, while that might not sound particularly exciting, it's important to note that the downside risk appears very limited given the company's strong fundamentals. In my view, the stock has already found its bottom, and we're unlikely to see any major declines in the near term. That means there's more room for potential upside from here. In addition, these analyst projections were last updated in early September, and since then, a few developments have taken place that I believe further strengthen the stock's outlook. Now, with Q3 right around the corner, this upcoming report could serve as a short-term catalyst, giving the share price an extra boost. So in my opinion, it's still reasonable to expect that UNH will continue trending higher over the coming months from current levels. So friends, if you enjoyed the video, drop a thumbs up and subscribe to the channel. Let me know your thoughts in the comments below, and as always, thanks for watching. I'll see you in the next one.